Good afternoon, this is Tom Asper of the Viper Report. It's Friday, June 24th, turning out to be at least an important day for the markets on a short-term basis, as we'll discuss. Too early to draw longer-term conclusions. You can see this is as of about 12:30 p.m. So the close clears part of the Dow's up 656, Nasdaq's up 268, all over 2%. S&P is up about 91 points. Pretty strong across the board. Volatility indexes I've been talking about in Thursday's report, it's been looking toppy for a month or two, but maybe finally stocks are reacting to the fact that interest rates had topped out short term, crude oil have topped out short term, and the volatility index, some resolute bears were looking for the volatility index to make it above 40 before they could say that the bottom was in place. And this chart does not, if you drop below here 24, that will look pretty bearish, which is a good sign for stocks. Low volatility is good, higher volatility. Down below here, you look at the really strong advanced decline numbers. 2735 up, 426 down. We have seen a number of days of very heavy selling, a number of weeks really, a very heavy selling. So there's a lot. The rubber band's been sort of stretched here. New high, new lows, has been horrible and still not positive. 7 up, 43 down. Volume's looking a lot better. Almost a 10-to-1 positive volume ratio. In terms of advanced decline numbers, you can see we had in the SPY, this is 90% selling across the board. You didn't see these kind of numbers in, we don't have the data for the 2007-2008 market for the S&P at advanced decline line, but other numbers haven't been this weak for decades, literally. You can see today's numbers are reflected. So right now, 90.4% of the S&P stocks are advancing, 88.4 for the S&P 1500. That's the large cap, small cap, and mid cap. And even the good old beaten down QQQs are getting up to 86%. Of course, another way to look at this is the NYSE All AD line. It has been the weakest of the AD lines. And the QQQ, as I tweeted this morning to clients, the NASDAQ 100 AD line has moved back above its moving average. Certainly, probably 4 out of 6 will turn positive with today's close. You can see it's turned up sharply, but first of all, you have to break this downtrend. That would be an encouraging sign for the intermediate term. And then the major downtrend here needs to be broken before you can really say that the decline that we've been undergoing since the start of the year is finally over. This is another way to look at the action today. This is a S&P 500 chart showing you the retracement. 38% retracement takes you to 4087. We're trading about 200 points above that or below that right now. 50%, above 4200, 61.8, 4366. You probably aren't going to convince some of the bears that the trend has changed unless you get above 4500, and we're a long way off from that. Another thing I'm looking at today, and I've been talking about a little bit in the publications, is this pretty slick watch list that was helped put together for me for Jerry A., who's was a student for over 2 years, I think, teaching about technical analysis. He agrees that he knew very little about the markets or technical analysis when we started out 2 years ago, but he has a very quick study. Turns out he has a lot of programming expertise too, so he has a very inventive and creative mind, and he's taken my guidance and insights and put them into programming, which is really slick. We'll talk about it more in a few minutes about what the future system that he created, and this just shows you. I monitor about 115 different ETFs. So this tells you the status on a day-by-day basis, which I'm using now to, make the ETF recommendations. This, incorporates the positive OBV and the positive R relative performance analysis. So you can see like ARKG, this is positive for 4 hours, positive for daily, still negative for the weekly. So if you go down here, FXI, which is China, it's positive all the way across the board. That's what you like to see. LIT, a lithium ETF, also positive across the board. SJB is a short yield, so it's a play on yields moving lower. And so I'll be sharing this information with you, but also will be after we get to close today. That's where I'll be looking at to generate new recommendations for next week's trading. Looks barring a total collapse in the last half of the day, the long side will be favored next week. We have been recommending a few stocks this week, not too many until we saw some more positive technical. This is one we recommended on Thursday morning. Resources Connections up 7.6% today. We recommended on Thursday's open, so you can see it's in the breakout level here, and it's closing up here. That would create, a range of about, $4 or $5 that should take it to 24 to 26. A little less dramatic is Treehouse Foods, but it's also acting pretty well today. It's up 3.7%. Shows a nice little tight bottoming formation. You can see that the OBV is broken out and the RS is clearly positive. So that's another one that I like. One of Jerry A's many insights was applying the Stark bands. Most of you know that I do a lot of work with them. They're originally developed by an old friend, Manny Stoller. And I know he is looking down, smiling in heaven that there are no software programs, to my knowledge, that plot them the way they should be plotted. So like after this week's action, we'll get weekly Stark bands for next week because they're based on the period ahead. But when you exceed those, you really doesn't show up on the chart. And Jerry was able to figure that one out, and you can see this chart, and that was one of the early parts of the trading system that have incorporated my teaching as his understanding and willingness to think outside the box has been pretty dramatic. So this is a daily chart of the S&P futures. We've been sending this out to clients for a couple of months, and now we launched at the start of the month, and I'll show you where if you go on the Viper report, you can see some of the recent results. Quite good. So this is we look at the weekly, daily, and the 260 minutes. So 260 minutes is really for traders. Let's go through the daily just for now. So if you see, this was in the March signal, it turned positive here, and so at that point it was projecting the initial target based on these flips, or these arrows are based on the price behavior, and a derivation from that generates targets. So the first target was 45.50. You can see that's a green line here that was met a week or two after that. In addition, he's created a stop method that's much better, in my view anyway, than the parabolic, chandelier, any of the other ones. So this dashed green line, is the stop on the long position. Dashed red line is the stop on a short position. So it, daily chart, so it flipped back to negative here on the 6th of April. And it started to wane here. Another interesting thing he did is to be able to create a cloud of price activity to show you when there's warnings. Down here we have a combination of the on-balance volume and other volume indicators. You can see it turned positive here. So it was in a positive trend, but not in a major positive trend because it failed up in here. It didn't get outside that resistance and started to turn. Also, you can see the blue on all the moving averages indicates rising 20 period, or yellows falling. So it started to flip over as the deviation flip was occurring. And then below this is a modification or derived from George Lane's stochastics, and is pretty interesting. George Lane's also was an old friend, so he'd be excited about this. So you can see it goes from very oversold levels down here, where this green shaded area is, up to overbought levels, and now when it's up in here, it's up above the linear regression channel, or down here it's starting to be below the linear regression. So it gives you an idea what the status of the market is. But you can see when it went short here, we had a little rally in April, a couple of bars up, but nothing ever triggered. Another push to the downside. You can see we made all these targets, down here at 41.33. Another weak rally. Another thing I'll be talking about is using the expected move data that we've added into the chart, which is really interesting. And it kept going down here and it's really not flipped. That was at May 20th low. Everything here, the volume is still weak. So this is based on closing data. And so this is the current bar that if we closed up here, it could flip the daily back to positive. We'll have to see when the day is over. But if it does, then it gives targets up here, of 41.20, I think it is, and 42.40 and 44.78. So it's pretty interesting. The rally, it turned briefly positive at the end of May, moved sideways here, but look at the volume action here. The volume wasn't supporting the rally, and the stochastics confirmer, was extended on the upside. So that all together indicated a failing rally, and that was that last wave of selling we just saw. So if you want to learn more about this method, you can go to Viper Report. We can look at, there's an article I've written, and I'm in the process of writing a couple of other ones to explain how the methodology is. This one shows you how we did in May. So there's a number of trades, a few losers, but overall it's quite positive. And of course, past performance is no guarantee of future results, and you shouldn't be trading the futures unless it's money you can afford to lose. But I've been very impressed. We've been working on the structure of this probably for a year and just refined it. We're continuing to refine it. So there'll be some small tweaks you'll see down the road. The charts will look a little different, but I think that's all progress. So if you want to learn more about the service and what's included, you can go down here to the Viper Hot Stocks Daily Alert. It'll give you the pricing, give you what's included. So the doji reports of stocks that trigger new buy and sell dojis, as well as daily scans. So I've been sending out daily scan reports as well, along with the futures update every day, because oftentimes, a stock like this HII looks positive, but I recommended it the next day, but it just went off to the races, and that's the problem. So that's why I decided to do the alert service. If you're interested, it's $65 a month. This is what the doji report looks like. And if you subscribe for 3 months, you save about 30%. It's $150. And I'll be talking about it also in my Wealth 365 presentation coming up in a couple of weeks. So that's all I have for now. I'll be, as I said, doing more coursework and more writing on this methodology. So if you're on the mailing list, you should get notification of it. Email me at tom@Viper Report. And of course, if you're interested in any of our services, you can go to the Viper Report and sign up. Viper ETF or Hot Stocks Report, or of course the new alert service. Hope you have a nice weekend. Thank you.